In this video, traders are going to look at why FOMO is so important to be on top of in this environment, and none of us are immune from this. We've got to be careful. Stick around. Hey guys, warm welcome to you. Alright, so FOMO, fear of missing out. I lost count of the number of videos that I've done on this topic because it's something that every single trader will struggle with at some point in time. Some people to a lesser extent, some people it will end their career because they will be constantly chasing things, fear of missing out, and they can't stand it and they end up blowing up their account. So somewhere in between will be how it impacts you. Hopefully not at that end, hopefully at the end where you can manage it, gets you from time to time. Hey listen guys, I still, and I'm not as experienced as some people who've been in this game for like 40 odd years, but almost 20 years, I still have FOMO. I still recognize like, oh, I'm going to miss this. Am I going to miss this? But I know now that, hey, this is not in my best interest to act on this emotion at all. Do not even consider it. You've lost far too much money in your early years reacting to things like this. So listen, it never goes away. It's just how you manage it that's important. So anyway, back to the initial point. FOMO is something you need to be careful. Now, why is it something to be careful of? Because the environment is so much more volatile. We're getting so many more bigger moves. So why does this FOMO affect this? Well, just consider, because especially in a situation now where when you're watching this, fine, but if you're watching this the current conditions, we've basically done this. We are here now, and imagine that the bull markets run up here. We have pulled down pretty sharply in a very short period of time. So a lot of people, especially if you're aligned long, are going to think, hey, you know, I think we're going to go back up at some point. I don't want to miss this rally, you know, and it becomes more meaningful than a normal kind of market condition where you're like, okay, I've missed the breakout of USD, JPY, or whatever you're trading. I've missed it. I'll have to wait. So, you know, that's easier to manage. And of course, we still kind of, that's the benchmark of FOMO. Like, oh, I missed out on this trade. I might want to chase it. I'm going to do that. But now it's exaggerated many, many times because we feel like there's a once in a lifetime potential opportunity to either be, you know, short for the complete hammer through the floor and for the complete depression if you feel that way, or for the bounce back to highs. We you know, that is a general feeling that even if it's not a lifetime, it could be for the next decade or next year. You know, it's a big opportunity we think that we're going to miss out on. And so whilst normal conditions we're going to miss out on a trade, you know what, we can get over it. This is far more magnified because we feel, hey, we're traders, we should be capitalizing on this massively. And so when you get scenarios like, in fact, this is pretty much what we are now in the market, you know, we ride off the lows, you get so many people like, oh, you know, I missed it. I don't want to miss out on the rally to highs. I don't want to miss out on the recovery. We could have a V-shaped recovery here, and they start chasing trades not because it's technically any good, because in reality, guys, you know, and I know everyone's kind of trading it differently, but if you're trading it long here, then you're not going to really want to still be in it when it goes through this low, right? That's pretty much how we operate. You know, we don't want to be in it. Unless you're investing, of course, in which case you couldn't care less. You're buying it, you're tucking it away, and whether that goes to there before it goes back to there is irrelevant. So forget about that for now. For trading purposes, you don't really want to see it go back to lows. Maybe give it a bit more room to allow for a wick, but you know, that's a big, big stop. And in reality, what we've got now is, what have you got here? So whatever your risk is here, let's call that X. You know, even if that's 5X, you're only in a 5-to-1 trade. It may appear like it's the biggest trade of the century, but only on paper. In reality, when you look at it, you only get a 5X return, which is not to be sniffed at, of course. But the point is that technically, if you're buying it here, you've got to be prepared to pull back. Now, no one's going to be doing that. No one really in their right mind, let me wind that back a little bit. That's a little bit excessive. No one really, for a short-term trading perspective, is going to buy here and then have a stop there, unless they've got a much longer-term view on it. And they're just not going to do it. Now, so you might well still be bullish, but you might well be a little bit more mindful about things and say, okay, if I believe that's the recovery, what am I looking for? Well, you're looking for some kind of pullback and maybe some support that's a higher low. And that makes more sense, right? Because then you can start to buy here and you're not chasing, you're waiting for your conditions. Maybe it goes further, but then you're waiting for a consolidation or a flag. and then you're trading off that flag and highs. You know, I'm not saying these are the right things to do, by the way, but my point is that it's a structured entry. What you don't want to be doing is taking the trade here just because you think you're going to miss the rally. That's the distinct difference. Fair enough taking the trade there if you've got some structure around it. Let's say you've got a bull flag on it, whatever the situation is, that's fine. But taking it purely because you feel you're going to miss out is deadly. It's absolutely deadly, guys, because even though the trade might work for a little bit, the point is you're reinforcing behavior that is just not conducive to long-term trading success. And we can flip on its head as well. And by the way, this is not a prediction whether we're going to do a V-shaped bottom, whether they go through here. It's a day at a time. From my perspective, I'm trading a day at a time. I'm looking to see the price action prior day before that, response to news, all those things that I know stand me well to make the best decisions from my trading and my perspective. That's what I use. And you should use your own kind of approach. There's no predictions in any way, but just the mindfulness of, hey, okay, I don't want to miss out. Having that in your mind is just deadly. And it works on the short side too, of course. If it's plummeting through the floor, you think, I knew it was just a pullback. I knew we were going to kind of go short. And I knew it was this. And the urgency of wanting to get in to not miss out is just not going to help you. So some of the warning signs you've got, and by the way, I had this flagging up massively for me. When that first drive low and we were pulling back and I was kind of selling, looking for a move lower, it was kind of popping up, and then, you know, it was stopping me out of a position. I got on the end of one of them and then I cut it, and it was a little bit early and it just fell through the floor. And then part of me was like, oh, this is the move. And like, listen, you're making good money on this. Just wait for your next setup. Don't be silly and start trying to chase things. And the irony is, if you had chased it, you'd have made a lot of money out of it, but you're just reinforcing bad behavior. Make money this time, but not the next time. Anyway, let's cycle back. Some of the warning signs you've got that you may be acting from a kind of fear of missing out perspective. Number one is that you're just trading the market order. You see something and you just want to get in. You impulsively want to get in it, compared to someone who's more methodical about when they want to get in, more structured, more cautious, more careful, more defined about their price they want to get in or the pattern they want to get in, even if that is at a higher price. It's like, okay, maybe you do want to go long. All right, so let me see, how can I structure the trade a little bit better? It goes back to the filters and trigger thing from the course. A little bit better, the filter, then the trigger, as opposed to just pulling the trigger because I want to go. So watch out for that one. The other one is, you know, scrolling through stuff saying, I've missed that. Your self-talk is, I've missed it, I've missed out, because you're literally telling yourself you're missing out. Don't do that. Try to manage that self-talk and say, hey, one trade has gone. This is going to give me 1,000 good opportunities over the next year at least. So what's one trade? And yeah, it might be the biggest move, but again, traders, guys, we're traders. Forget about the investor's biggest move percentage. Okay, you may well get this move from the bottom to there, but what happens if you're in the smallest size possible? Who cares? You've made a small bit of money. It's about when you're putting the throttle down. Maybe you're trading more size and you're getting a worse position, but you're trading 5 times the size, 10 times the size, because you can do, because all of a sudden you can structure the trade a little bit tighter, stop can be a little bit tighter, the overall risk can still be the same, but you've got 10 times the position size. And then you may only get a little chunk like this, a 2-day move. But if you're in 10 times the clip size as you were there, you may well make massively more. So, you know, it's not necessarily about the order of magnitude of move, guys. As we know, just a reminder though, it's about position size. And you can find the right place for the right position size. You can dial it up and make way more than just being a hero and getting the whole move. So always have that in the back of your mind. It's like, okay, I don't need to get whole moves. I don't need to be on the end of everything. I'm just looking for those little trades that offer me, you know, little trades as in small moves. And that could be, if you're a day trader, a couple of hour move, could be swing trader, 3 or 4 day move. You don't need to be in for the whole week or whole month to gain. You can dial up your position size accordingly. So with traders, guys, just remember that. And it's so easy to get caught up in this feeling of, oh, it's a big move, it's that and the other. But, you know, think about how you operate, how you make your decisions and all this kind of stuff. So watch out for FOMO, guys. It really is at the moment a very, very big thing. As I said, the order of magnitude of pressure we have on us at the moment, the current conditions, is a lot, just because the swings are big, the prices are prices we've never seen before as well, which adds to the, oh, don't miss out on it, don't miss out on it. We're just saying, guys, anyone who kind of went in here thinking, I don't want to miss out on the bounce, these prices are prices we haven't seen for ages, which was quite accurate, you know, just had their face ripped clean off when it just went further and further and further. So, you know, there's never ever a free lunch out there. It's always got to structure the trade, consider where the exit is, consider the position size, and take your time. There's plenty of time. Very rarely in this environment do you have to just panic into it. In fact, never panic into it. That's the wrong word to use, but very rarely do you have to literally go now because you see something. Very, very rarely. Take your time. Do you still want the trade? What level do I want the trade at? Where do I come out if I'm wrong? The key thing we always talk about. Where am I looking for the trade to go? Is this sensible with my strategy, with my approach, with my experience? Am I right to be buying it up here? Maybe it's full momentum and you're happy to, then fine. But if you take a step back and go, you know what, we're still in a cyclical market, we're still kind of unwinding, maybe I need to just wait and see if we get an unwinding. If you don't get it, you don't get it. But if you do get it, then at least you've waited and stuck to your guns and stuck to your process. And it's much more a professional approach, guys, than just tapping away on buttons because you see something up or something down. So anyway, take care out there. Please keep the risk managed, as I always say. And it's more important now than ever. Bye-bye.